Hello, welcome to the Money and Markets Show, and I'm Charles Bodge, your host. Now, we've seen quite a tough run for the local unit over the past 3 or 4 months. It has lost very good traction against major international currencies, especially the dollar. But over the past 2 or 3 weeks, we've seen the shilling again gaining a bit of traction, this time driven by a number of factors. Of course, others are pointing to the fact that there's been an improvement in inflows, as it normally happens towards the festive season. But I want to put this in context by picking the mind of one of the sector players in the financial markets.
During the month of November, we opened with the shilling trading at the 3785, 3795 levels. During the month, we saw healthy inflows filtering into the market from NGOs and some offshore remittances that outweighed the demand during the month, and the shilling touched highs of 3735, 3745. It later closed the month at levels of 3740, 3750. Overall, during the month, we saw healthy supply that continued to outweigh the demand pockets during the month, hence the shilling strength during the month. We ended the month with the shilling trading at the levels of 3740, 3750. We continue to see healthy pockets of inflows, NGOs, as we draw close to the end of the year, some remittance flows coming through. On the other hand, demand from importers was outweighed by the supply. So the shilling closed at 3740, 3750, and those are the opening levels during the month of December. We continue to see an overall slightly strong shilling at the moment. At the moment, the levels are favorable for importers who were previously paying more shillings to buy dollars earlier in the year when the shilling was much weaker, levels of 3800. Current levels of 3740, 3750 give them a bit of benefit. On the other hand, for those who are dollar sellers and were previously used to selling at higher levels with the weak shilling, they get less shillings for their dollars at the moment. Overall, for importers, it's a favorable environment, relatively favorable environment for them now to buy dollars and continue their business operations. Usually for the month of December, we see some NGOs doing conversions as they close out projects for the year up to mid-December. So we still anticipate that healthy flows should come through into the market. Also some diaspora flows, though with the global economy, these may not be as substantial as they've been in the previous years, but we anticipate that these will also continue to come through, and also remittances from offshores that should be able to comfortably cover the demand. So we anticipate that the shilling may range between levels of around 3650 and 3750 in the short term, and then we may see it weaken as we get into the new year to trade within levels of 3700 and 3800 again. For the month of November, we didn't have any monetary policy committee meeting. The next MPC meeting is scheduled for tentatively 7th December. That's when we'll have the next CBR reading. So at the moment, CBR was still at 10%. The only other release that we had in the month of November was the inflation number, where we saw headline inflation at 10.6% from 10.7%. In the month of October, still relatively flat and still in double digits, which still continues to point to adverse conditions in the economy, still impacting businesses with high inflation and still relatively high fuel prices, though we've seen pump prices slightly lower than the previous month. So the outlook we still anticipate the economy to remain relatively challenged with the high interest rates and also FX rates at the moment. Overall, like I've mentioned, The economy still continues to battle with relatively high interest rates because inflation is still in double digits, though we've seen it flat and slightly easing with the rains. Of course, food is becoming more available, but we still continue to face the impact of global oil prices, which are still relatively high, and these have filtered down into our pump prices, so they continue still to impact businesses. On the exchange rate side, shilling still remains relatively weak in comparison to where it opened the year, so businesses, especially importers, are still facing the brunt of a weak shilling impacting their businesses.
Well, agriculture is the backbone of Uganda's economy. However, this position has been challenged by several variables. Of course, these range from production to marketing to financing the entire agricultural value chain. Now, today we pick the minds of some of these key sector players to find out how best can the country optimize the dividends from this critical sector.
You are a farmer. You can access money through a bank, but is it affordable and is it appropriate? If you got money to grow coffee, the appropriateness is in terms of when are you supposed to pay back? Does it match? Does the loan match with the gestation period of the crop?
Financing is just one of the many challenges that farmers have to put up with in the country today. The farmers' challenges begin right from the farm all the way through the value chain to the market. It is the aspiration to rein in these challenges and change the farmers' fortunes, who remain the majority economic group in the country, that is now bringing together agencies both public and private.
Action agreement as a mechanism that will guide the way we operate with our stakeholders, especially those involved in production, aggregation, standardization, and post-harvest handling, to those who are doing warehousing, and then we do the warehouse receipting at that level. So today we signed with the Uganda Cooperative Alliance, the Green Council of Uganda, Uganda Farmers Federation, and ourselves, Uganda Warehouse Receipt System Authority.
Through the agreement, government seeks to reach the farmer at the grassroots, but most importantly, to be able to guide on produce standards, which today remains a big inhibitor of farmers' benefit. For instance, a few years back, Kenya turned down Ugandan grain over quality issues and specifically high aflatoxin levels.
Much of the grain becomes contaminated at the farm. Because this poor farmer, we really need to applaud them. This poor farmer has no space, has no capacity to clean and maintain and ease the grain to make sure that it is free of the aflatoxins. Now, with this intervention, they will know that once I harvest, I don't have to store. If it needs drying, I go to the warehouse owner, and the warehouse owner cannot cheat me because the regulator warehouse authority is observing.
To government, the signed framework agreement to address most of the value chain challenges will not be met by a single player, more so the farmer.
So today we agreed officially to work together, like we've been trying to work together. And our job, or our work, is going to involve sensitizing people about standards, about the benefits of aggregating. Then we find mechanisms of storing, cleaning, drying, and standardizing the commodities, including the infrastructure where those commodities are kept. Then we shall go into now the warehouse receipting.
Transforming agriculture is a Herculean task given the number of processes and players involved, including the farmer, the storekeeper, the middleman, the processor, the financier, the insurer, among others. This gives currency to today's framework agreement, but only as a stepping stone to bring on board more critical stakeholders, especially financiers. We will now take a very short commercial break. Money and Markets continues after this break.